Alright, what's going on everybody? So in today's video, I'm going to be showing you guys a trade that I took throughout the week. How I mentioned before, once a week I'm going to be sharing with you guys the best trade that I took throughout the week or a trade that hits stop loss. The point of doing this is to show you guys that losses are completely normal in Forex, right? Me personally, at least every trade that I take is at least a 1 to 2 risk to reward, meaning that I can lose 5 trades and win the next 5 trades and still be up 5%. So what's important is that your psychology is on point when you're losing trades, that knowing that your system is proven to work, and then in the long run, you'll be in profit. So let's get right into it and go over this week's trade that hits stop loss. So this is what I'm first presented with when I come in the morning to sit down, right? Like this is literally what my graph looks like. It's just pretty much naked, right? So the first thing that I do is mark my highs and low on the M5 time frame. So if I'm trading right here, which this is Monday, my high and low is going to be coming from one previous trading day before, right? So it's going to be the highest and lowest points between Frankfurt and New York session. So this is going to be the high of day that I have right here. This is the high of day right here. And then now we're going to mark the low of day, right? So this is the high of day here. And then now we mark the low of day over here. And then just real quick, just off of me marking this right now, you guys can see how price respects these areas. Notice how London tapped the high of day from Friday to the exact pip. And notice how this move to the downside came from. Like it literally came from this area here. So now that we have the high and low of day marked, now we're going to mark the previous high and previous low of day, which is 2 previous trading days and the one we're trading from, right? So if we're trading on Monday, the previous high and previous low of day is going to be coming from Thursday. And same rules, right? The same rules apply. It's going to be the highest and lowest point between Frankfurt and New York session. And the most accurate time frame to do this on is the M5 time frame, right? So we do this right here. This is the previous high of day. And then now we mark the previous low of day over here, this area here. And then now the next thing that I do is do a top-down analysis, right? So now we're just going to do a top-down analysis. And look, notice here too, there's literally the same exact thing on Friday. Notice how price on Friday used the high of day to give the movement during London, right? Notice how it's the exact pip. That's where the volume comes in from. And then notice it here again to the exact pip. That's where the volume comes in from. So these areas are key areas. So when people ask me, why do I mark the high and low of day? These are key areas in the market that price respects throughout time. And then if you have an area of supply or demand in confluence with one of these highs or low of day, you'll notice that this is a high probability area to take a trade from. So now that I have this done here, now let's do a top-down analysis, right? So now we can start from the weekly and work our way down. All right, so one key thing is this right here, right? So we're gonna do a top-down analysis and identify where the market is going. So we notice that price, how I tell you guys, price gives these big pushes and price will use the previous contrary candle as an area of supply or demand to then continue the move. So notice this right here, right? Notice this area of supply right here. Actually mark it with this. This area of supply right here, this previous contrary candle that gave this push to the downside. This was created in, it doesn't let me see because it doesn't tell me down here. But this is on the weekly time frame. So keep in mind, this is about at least 2-3 years apart. And notice how these areas are respected, right? Notice how it doesn't matter how long it takes for price to pull back into these areas. Notice how price respects these areas. Same thing over here, right? Notice this area here. Let me point out this area right here. This new area right here. Notice how price pretty much tapped this area to the exact pip. And then that's where this huge volume to the downside came in from, right? So it doesn't matter how long it takes price to pull back into these areas. Just know that there's still valid areas once price pulls back into them. So keeping that in mind, notice when we have this huge push to the downside, the previous contrary candle that created this push was this candle right here, right? Notice this previous contrary candle right here on the weekly. So we can mark this as weekly. It doesn't matter how long it's going to take. We could identify that eventually price will pull back up into this area, filling the void that created the push to the downside, and use this area as supply. Well, they got a nice pullback from this area. Like we got to see what price does once we reach this area, but price always fills the void and goes to the previous contrary candle that created the push. Now, what does price do with areas of supply in between? Price uses areas of supply in between for pullback zones to then continue the push to the upside. So notice this pretty much. Notice how this area of supply right here, price used it, reacted off of it for a pullback, and then price continues to the next area of supply right here. This previous contrary candle, price pulled back from it. Same thing here on the daily. Now if we go to the daily, I'll show you guys exactly where price is pulling back into. Notice this right here on the daily. Price used the same thing, this area of supply over here, this previous contrary candle, tapped it exactly, did a pullback, and then now we're continuing to the upside. So if we go to H4, I'm gonna mark down exactly where price is pulling back to and continuing the move. So let me see right here. Notice this. Notice on H4, this big push to the upside, the previous contrary candle was used as demand right here, right? This is demand on the H4. So notice this big push, pullback into the previous contract candle, price wicks this exact area, creates a bigger push to the upside, and then price pulls back into the previous contract candle using it as demand right here. So this area right here, H4 demand. Notice how price pulls back into the previous contract candle and price respects it. Same thing, now I got this big push to the upside. And then now the area that we're working with is this area here, right? Notice this H4 right here, H4 right here. That created this push, price pulls back into it, we're respecting it, and now we're getting this reaction off of this area, right? So the next target for price is gonna be this H4 supply eventually, this area right here, H4. And then when price breaks past this H4 supply, the next target for price is gonna be this daily supply up here, right? So the next actual target for price, once we break past that H4, is gonna be this daily up here. Why do I say that? Because once we break past this area here was already used on the weekly, and there's nothing stopping price up until this previous contrary candle right here. Eventually, price will make its way up to back up to this area here, but this area is next for price, right? So now that we got this in mind, let's go to H1 and continue our top-down analysis, right? So this is what we're presented with when we come to trade for Monday morning, right? Notice how we have this nice void to fill right here to the downside. And then we have an area of demand right here on H1 in confluence with the previous high of day. So this is a high probability area to take a buy from, right? This area right here, H1 in confluence with the previous high of day. And then if we go to H4, notice how it's in confluence to the exact pip. This H4 demand is in confluence to the exact pip with the previous high of day. So this is a super, super solid area to take a buy from. And then if we go to H1, when we come to trade in the morning, this is what we're presented with, right? Notice how we have this nice void to fill with this high probability area of demand. And then we have this being formed. Notice how price to the exact pip touched this area of the high of day and gave this nice push to the downside, creating this M15 supply right here. M15 supply, we mark it like this. M15, and then we go to M5, and you'll see how we have M15, M5 in confluence. So we have this area right here, M5 and M15 in confluence. And if we go to M1, let me see. So M1 as well, we have an M1 supply as well in confluence with this area. So M1 would be this one right here. This area right here. Notice how I'm not marking this area here because this area is already pulled back into and used. So this is the M1 supply. And then when it's time to trade and we come to sit down, I was expecting price, well, I wasn't expecting, I was anticipating price to pull back into this area. I was waiting for an entry confirmation off of this area on a lower time frame to continue the sell movement to the downside to fill this void right here to eventually pull back, like for eventually price to make its way back up. So I was waiting for a pullback into this area, sell from this area, nice sell movement to fill this void, and then price eventually make its way back up. All right, so now let's see what price does when it touches this area, and let's see the entry confirmation that I got off of this area, right? So let's fast forward. Now let's see what price does. Okay, right here. What does price do right here? Once we tap into this M15 supply, right? Notice how price creates this M1 supply right here. This is our entry confirmation on a lower time frame right here. Notice how people ask me, what is an entry confirmation? An entry confirmation is price creating an area of supply or demand off of a higher time frame supply or demand. So for example, notice how price taps this exact area, this M15 supply, and then we get this nice push to the downside, creating this M1 supply right here, right? And then if we go to M5, it would be right here. If we want to anticipate that it's going to react off it, like if we want to anticipate that it's going to create an M5 supply, it would be this area right here, right? M5, M1 off of this M15. So having the M5 and the M1 in confluence, I enter always off of the closest one because you don't know which one price is going to react off of, right? Sometimes you could place your sell limit here at the M1 and price will just react off of the M5, and to have the, like, you just trying to have the most precise entry, you'll be left out of the market, right? So I entered right here at the M5 with a 8 pip stop loss. So the trade looked exactly like this, right? So we have our M1 confirmation off of a higher time frame zone. We fast forward. Notice how price went into a little bit of profit and then price literally just took us out, right? So there's nothing wrong with this trade. We had literally everything in confluence. We had our void to fill on the higher time frame. We had our entry confirmation on the lower time frame from a higher time frame supply created off of the high of day. So everything was in confluence. There was nothing wrong with this trade. This is just probability business, and this is one of those trades that hits stop loss. All right, guys, so you see there's nothing wrong with a loss, right? A loss is just as normal as a win. A win is just as normal as a loss. You can't get excited about either or. You just gotta follow your strategy and let the numbers play out in the long run. So make sure you guys follow my free Telegram and my Instagram. I literally post my analysis every single day for New York session. Leave a like, comment, subscribe, and I'll see you guys in the next video. Peace.